Today's topic is huge, buying a home in South Carolina. Whether you're a Beaufort beauty, Charleston charmer, Greenville guru, or Myrtle mermaid, financing your dream home can feel like a maze. Hi, I'm Relocation Realtor Diana, and I help people just like you move from all over the world and relocate to South Carolina. Allow me to introduce my team member, mortgage broker Benji, who has helped clients finance their homes for over 27 years. In this episode, we will break down the mortgage process in South Carolina step by step.
Hey, I'm your broker, Benji Gecy with Beaufort Lending. Here's my step-by-step procedure for loans. We've been doing this for 27 years. So last 5 years have been really different. As everybody knows, the pandemic has changed things. So we've really digitized our business. So first step, number one, is what we do with Beaufort Lending is when we identify a client, whichever channel that they come through, we send them a digital application. Most buyers right now, believe it or not, they want to fill out the application on their own. So they don't really want to talk to loan officers too much, but they do want to get that information quickly and they want to get a decision quickly. So we've digitized our application. First thing we do is we send them the blink link. And I think we built you one, which looks great. You have your new custom buyer's link. So when somebody comes in, you can forward that and it does showcase your brand as well. So we get that to the buyer fills it out. They can fill it out at their leisure. That pings us immediately as soon as they start filling it out. And then we can jump in there with them as well and we can start co-browsing. So that's how we started off right away. And the buyer is able to get that done pretty quickly. So as soon as it's completed, we may have to help them a little bit, but we can literally have that pre-approval done in a matter of minutes. And the system will pull the credit bureau if they want to do that. And we always do a soft pull. So we never do a hard pull on a client right away. We do a soft pull that doesn't ding their credit bureau. And that does give us an idea of what the buyer can do at that point in time. So those are the first two important steps. So my number one tip right now is you definitely want to shop your rate, shop it with a mortgage broker. Number two, don't let a creditor or lender do a hard pull on your credit. So do a soft pull. Sometimes you have to pay for that, but that is definitely not going to hurt your credit if you do a soft pull, Diana.
I have clients reaching out to me before they even have a pre-qualification letter. How important is that, obtaining that prior to actually even looking for a house?
Well, the pre-approval letter is the most important thing right now. And just for, to give you an idea of what the lenders are going to look for, typically 30% of your income is what your housing payment should be. So if you want to qualify yourself pretty quickly with a housing payment, 30 to 40% of your gross monthly income can be your housing payment. Now we can go higher than that. And there are lenders that will go higher than that. On a debt ratio, you can't exceed 50%. So 50% meaning your housing payment and your total debt. So when you add all that up and you divide by your gross income, can't exceed 50%. There are some programs that will go higher than 50. VA, we've done 60% on VA. FHA, they'll go up to about 54, maybe 56% on the FHA. So there's some flexibility there. The good thing about mortgage brokers like myself is we don't have overlays. So some lenders, although VA and FHA will go to 56% or 60%, some banks say we're going to cap that at 42 or 45%. So you do definitely have flexibility with the mortgage brokers. Mortgage brokers have all the programs and many different lenders that they can go through. And for 20, we've developed 20 of the best and the top lenders in the country, from United Wholesale Mortgage. We have Rocket Mortgage as well. They're pretty good. Orion Lending's very good with government financing. We have some other smaller boutique lenders that do really well. But across the board, UWM, United Wholesale Mortgage, they're the nation's number one lender. They're by far one of the better lenders that we deal with. And we're closing loans with them in 10, 12, 13 days right now, which is really incredible with the technology.
Benji, I know I want to work with you. I want to work with Diana and the team. And how important is that half rate going to even affect me? Why?
So Diana, we all know that real estate prices, at least here in coastal South Carolina, across the country, are the highest that they've been in 30 years. When you mix that in with the highest rates in 30 years, and I shouldn't say the highest prices in 30 years, we're at the highest prices ever in history on real estate prices, but we're at a 30-year high for mortgage rates. And when you mix that together here, the rate is really important. And don't let realtors, don't let other mortgage lenders tell you the rate is not important. the rate is extremely important. And what I see, we see lots of applications come in, advertising statement on all of my channels, YouTube, Facebook, Instagram, TV, radio. You got to shop your rate. The best advice that any buyer can have is shop your rate. Shop it with 3 or 4 people. Don't let them do a hard pull, do a soft pull. But if you shop that rate, what you're going to see, Diana, is you're going to see a big dispersion in rates from your credit union to your bank to your local lender to a mortgage broker. And it will surprise you what the differences are. And if you do shop that rate, you're going to end up saving a lot in closing costs, and you're going to get a much lower rate than just going to one lender there. So I think it's extremely important to shop the rate. Rate is a big deal right now because the prices are so expensive. But for example, we have some lenders that are at 7.8. We're closing loans at 6.9. The average home is 400 and something thousand in Beaufort. It's higher in Charleston. That's the difference in about $200, maybe $250 a month. So that could be an insurance premium. It could be your homeowners association dues. There's a big difference there right now. It could be the difference in you actually qualifying for the home. And we've seen many, many buyers that the difference in our rate and the other lender that they were working with, not only can they qualify for the home, but they can buy a much more expensive home. And if you have 3, 4 children, that 4th bedroom is a little more expensive. The rate is the difference in you getting that home that you need for your family.
So explain a bit about pulling it on a certain day. I know if you pull it on one day versus another day, you can have a completely different rate. So depending if you get 6.9% at one time when you give them the quote, how long is that good for? Let's say that, you know what, I want to go with you, Benji, and it's 6.9, but I just heard that mortgage broker quote me for 6.75. Can you match that? How do these rates even work? It's like you wake up and all of a sudden it's a different rate. And how long is that locked in once you get that pre-qualification letter?
So that's a good question. And when you're shopping around, you got to remember that the bond market dictates what these rates are doing, and they change by the minute. So if you get a quote at, let's say 12 o'clock in the afternoon, bonds start getting heavily traded around 1 o'clock and you start having some sales. You could have a bad sale, you could have a good sale. The rates could start changing. And the market conditions are very volatile right now. With the rates being as high as they are, the economic data that's coming in, we're seeing 5, maybe 6, 7 rate changes a day. So you've got to really stay in tune with your mortgage loan officer, your mortgage broker, and get those updates maybe a couple times a day or every other day. So you want to subscribe to their YouTube channels, Beaufort Lending. You want to stay in contact with those mortgage officers via email. But it's very important because we're seeing, 1 week rates go down, the next week they go up. So we have to pay attention to these by the minute. And every lender gives us updates as they change the rates. So sometimes your head's spinning that rates are changing so much. But when I quote a rate, I let them know that this is good, for a couple of hours, maybe by the end of the day, but you definitely want to check back with us for the next day. So that's a good tip, is definitely get your rate quote and stay in touch with those loan officers and watch the mortgage conditions. So one thing that I look at is I look at the TNX. So if you follow stocks, TNX is the 10-year, and you can kind of watch what that 10-year is doing there. And if you got a quote in the afternoon and you see that that chart is down a little bit, the next day you open up your chart and it's a little lower, you're going to know that rates are lower. So that's a good indicator of what consumers can watch for. And that's what I watch every day, is the ticker symbol TNX. And that's the 10-year treasury. And if you just watch that chart, if chart's going up, rates are going up. If they're going down, rates are definitely improving. So that's my number one go-to. I can kind of see what the trends are on that. And like I said, for the last 5 days, we're coming off of highs around, 7.3 on conventional, 6.8, 6.7 on VA. We've dropped all the way down to 6.2 on the VA. And on conventional, we're back in the 6s. So my forecast for the rest of the year is, I think we're going to get to 5% on conventional. That's a big move lower in rates. And I'm one of the more optimistic experts forecasting rates out there. Fannie Mae, Freddie Mac, they say that rates are going to be higher for longer. I disagree with that. I think there's too many side effects and too many problems that are going to happen with these higher rates. There's hundreds of thousands of consumers that cannot buy right now. So rates are going to come down. I think they're going to be forced to move those down. And when they start cutting those rates here in the summer or closer to the election, they're going to go through a series of rate cuts as well. And we're going to see some really good rates within 6 months to a year here. So I think we're in a bullish market for interest rates and housing for the next year here, Diana.
I think that you made a lot of people's day by saying the 5% rate. And, just thinking about 5% even a year ago, we're like, whoa, five, no thanks. I'm waiting for 2.75 or 3 again. And do you think that's ever going to happen? Will we ever see those rates again?
Well, 16, 17 years ago, 15 years ago, we got down in the threes in the Obama administration, and those were some really good rates. And I thought we would never see those again. And then the pandemic forced rates even lower. They did 3 times the amount of mortgage-backed securities purchases. We'd have to have a real bad economic event to, get back to those areas. And I don't wish that. Those are the only reasons that rates ever got that low. So no, I don't think that we're ever going to be there again. Here's some good tips and tools that could possibly get you there for a short period of time. And that's that 3-2-1 buy down and the 2-1 buy down. Those are very popular right now. We try to encourage every buyer to utilize, especially with the higher rates, to use the 2-1 buy down. If they can't get the 2-1 buy down, do a 1-0 buy down. And here's the percentages of what the seller has to pay for it. The seller does have to pay for it. Can't use it on refinances, only purchases. But 1% for the 1-0 buy down is slightly below that. And then a 2-1 buy down is 2.2%. So if you can get the seller to pay 2.2% of your loan amount, not the contract price, you can have, so like I said, 6.2 VA right now, you could pay 4.2 on the 2-1 buy down first year, second year 5.2, and then you go to the 6.2. By that time, we should have lower rates and you can refinance. The other good thing about those buy downs is if you refinance or pay the loan off before that period is up, the balance is applied to your principal balance there. So if you have leftover monies, you get that money back. You don't lose it. So I'm a big believer in the 2-1 buy down right now. Instead of negotiating a price lower, get the seller to pay closing costs and get them to help you get a lower rate right now. So, and that doesn't just apply for the higher rates right now. As the rates drop to 5, you could do a 2-1 buy down and get 3 for the first year, then go to 4, and then you go back to the 5. But that's a major advantage for buyers right now. And actually, Diane, that's a good tool for sellers as well. We've seen a lot of sellers be able to sell their property because they don't want to come down $40,000, $50,000 on the price, but they were able to pay $10,000, $15,000 of buy down monies for the buyer. And they save, $500, $600 the first year, $300 the next year. And that was a difference in that family really, making the decision to buy that home with some of the escalated prices and everything. It's important right now because everybody knows that rates are going lower. So they take the buy down and then they, I'm sure and certain that rates are going lower. So most of the experts saying they're going lower. Maybe that's happening in 6 months, a year, 2 years, but more than likely we're going to have lower rates within 2 years. So lots of buyers are taking advantage of that buy down. So that's a really, really powerful tool right now for buyers and sellers on the market.
I know you listeners and watchers are having a lot of questions right now. Like, what? Those were a lot of numbers. I didn't understand what you just said, but don't worry because Benji tailors all of these packages to each individual buyer and seller. And so that's why when working with a team like us, we could definitely can tailor your best program to save you the most money. Now, Benji, give us an example of how you used one of these, or a special program, especially for the VA, where it was like, wow, and because you came to Beaufort Lending, then you just saved them this amount of money versus had they not gone with you.
Well, here's an example of one in Columbia, South Carolina. We just did a prior homeowner. We refinanced his loan. He's selling his property. He had a member of his church that wanted to buy it, and he sold the home to them. He gave him a very good deal. Neither one of them knew what a buy down was. They could not afford to buy the home at $410,000. But as soon as I designed the program of the 2-1 buy down and showed them the advantages of it, they said, oh, well, that payment's $600 cheaper than what I thought it was. Now our family can do that. That was the difference in this family buying the home, and it was a difference in him selling the home as well. So they both took advantage of it, and they're really happy about it. So here's what's got to happen in the next couple of years. They're at 6.5%. They locked in about a week and a half or so ago. So they're going to pay 4.5, 5.5, then 6.5. We want those rates to go lower. And if my forecast is true, if rates hit 5%, maybe 4.5%, they're going to be able to refinance on the VA IRRRL, no income, no appraisal, limited closing costs, pay off that VA loan, and then get the balance that the seller paid for their temporary buy down applied to their principal balance there. So that's like a couple of day old situation there. But people just don't know about these programs because most banks don't offer 2-1 buy downs. You have to go to a mortgage broker or a retail lender that is very experienced in that. And for 25, 27 years, we're finding all these programs, especially in markets that are difficult like we have right now, where high prices, high rates, you still can do mortgages. How do you give the buyer the tools and resources to buy property? Well, the 2-1 buy down is great. 3-2-1 buy down is even better. But we see most of our customers able to get the 1-0 buy down. So sellers aren't really paying the 2 and the 3-2-1 money, but we are seeing a lot of the 1% plus a little bit of extra closing costs. So that's a good example. That family's very happy, and we're going to close here in about a week or so. So that's going to be about a 14-day closing on that VA loan. That's going to be a quick one.
So how long is that rate good for? So let's say that a person receives it on the beginning of the month. Is it good for until the end of the month or until closing date? Like, is it good for 30, 45 days? How does locking in a rate actually work?
So that's a great question, Diana. And, buyers, most lenders take 30 to 45 days. So locks are expensive for 30 to 45 days. When you close with Beaufort Lending in 15 to 20 days, guess what? We only have to lock the loan for 21 to 22 days. So that saves you thousands of dollars on the lock, and closing quicker gets you into the home. Sellers like that as well. So, if you have a new build and it's 60, 90 days out, 60 days is going to be more expensive than 90 days. But in the volatile conditions right now, you definitely want to lock in, especially what we just talked about. We've got a little dip in rates right now. Lock in with the dips, protect that rate. With a mortgage broker, we have 20, 30 different lenders. So if rates go down, more than 0.5%, we have the option to go with another lender. We don't like doing that. But if you have a $400,000 or $500,000 loan amount, and we're halfway through the transaction and rates have improved more than 0.5%, we're going to try to find you the better deal with another lender. We don't like abandoning locks with lenders. We don't like canceling that business because that does hurt our pull-through ratio with the lenders. But we will do that if it's more than 0.5%, because we know you as a consumer or your consumers, if they hear that the rates are going lower, they're going to start shopping. And on 400,000, 0.5% is, $150, maybe $170 per month there. So that's the advantage we have as a mortgage broker. Your local lender, they lock you in, you're locked in. They can't do anything. If rates improve a point over 30 days and you got another 45 days left, unless they have some type of float down option, you're pretty much stuck with the rate you locked in. With mortgage broker, we talked about it. You got a lot of flexibility with a mortgage broker.
Okay, for those of us who are not familiar with the term mortgage broker and could go directly to a lender or a credit union, the bank, etc., explain to someone what exactly a mortgage broker does and why would they want to use one?
Well, back in 1997, I became a mortgage broker, and I'm glad that I did. Mortgage brokers do offer the most flexibility, is what we talked about. And as a consumer, you want that flexibility because if something goes wrong, the mortgage broker has a bunch of different options and resources to go to other lenders, other underwriters, other banks to make your transaction work. So, from a mortgage broker standpoint, they're an independent bank that works for you. They don't work for the bank. Yeah, they represent the bank and they sell loans. They place loans with banks, but the mortgage broker works for the consumer. That's the difference between, a retail lender or another lender or loan officer with a bank or credit union. They work for the bank. They're working for you as well, but the mortgage broker truly works for you, the client. So that's the biggest difference. our clients, we try very hard to get them the lowest rates, the fastest closings, and the lowest closing costs. And we do that through a variety of, options with, different lenders and incentives. And, we get a lot of clients who have lower credit scores. So one bank might not be good with a lower credit score. We have the option to go to, different banks that still have pretty good rates. And if that doesn't work out at that bank, we got the option to flip it to another bank. So, very seldomly when we issue a pre-approval for a client, that loan almost 100% of the time closes because we have so much flexibility and our rates are really good, even if you've got a little lower credit score.
When it comes to picking the right mortgage broker like you, Benji, but let's just say for whatever reason, they decided to shop around, like you said earlier, shop around, get 3, 4, 5 rates. And what credentials should they be looking into with a good mortgage broker?
That's a very, very good question. And it's very easy to do. Just go to Google, look at their reviews. The best mortgage brokers are going to have the best reviews. Beaufort Lending, we're one of the top mortgage brokers in the country. We've got some of the top reviews in the country as well. So if you go to Google, you look at our reviews, Google does not let you get reviews for free. You have to earn those reviews, good or bad. They're in there. We've got some of the best reviews in the country and we're proud of those. We're honored for those reviews there. We ask every client to go in there and write a testimonial. The ones that really want to make a difference, they go and they write the review because they want the next consumer to experience what they experience. Hey, shop your rate. I was going with this bank and they were at 7.5 and Beaufort Lending got me 6.5. And if I hadn't shopped the rate and just checked around a little bit, I would have paid a lot more money on my mortgage. So you don't have to pay more and it's free advice. Just do some due diligence, shop around a little bit. But number one, check out the Google reviews. If that mortgage broker does not have Google reviews, skip right through them and go to the next one. And you don't have to have 5 stars, but something between 4 and 5 stars with more than 20 or 30 reviews. That's going to be an experienced mortgage broker. And they've got some testimonials out there. And I would read them. Go to the bottom and read some of the experiences there. You can get some pretty good insight from those Google reviews on how the transaction worked. Was it quick? Did they get a good rate? Did the loan officer call the customer back? Was the underwriter with the lender causing a lot of problems with them? You'll see some of those problems that clients had on bad reviews on Google, but you'll also see some of the positive situations and experiences that clients have had there. So that's my number one go-to is when people are shopping me around, I just say, hey, read those reviews, look at our reviews and compare them to the other companies there. Our rates are really good. Our service is really good. That's what makes us the top 1%. But the reviews are the most important thing there. And I can't speak high enough about the Google reviews. And like I said, we're honored to have what we have there. And we appreciate all that loyalty from our customers. So thank you very much to everybody out there.
Okay, so let's recap. A mortgage broker shops for the best rate for the consumer. They work directly for the consumer. So some of people that might be listening at this moment are saying, well, how much do you cost extra on that mortgage loan to use a mortgage broker?
So statistics show, and this just came out about 2 years ago, there's a lot of data that comes in on these mortgages. And I think by accident, the federal government released some data out there has proven that, on average, you save $9,000 going with a mortgage broker. And if you're a minority, it's even higher than that. It's about 12 or 13. Now that's on average. Our rates at Beaufort Lending are well below the national average. So you're saving more like 20 to 25,000 by going with Beaufort Lending on average because our rates are lower and our closing cost is lower. So, there's definitely advantages there. I see some of the lenders like today, lenders that their rates were not that good. They're coming into the market and being more competitive right now. So it's good for the consumers to have options and to have lower rates. So got to remember, the loan officer at the bank works for the bank. The bank wants to make as much money as possible. So they're trying to sell rates that have to pay for that corner office. We get rates on a wholesale level. All of our lenders do not pay us any money. You don't pay us for the mortgage, the bank pays us. They give us a premium. So if we place that loan with one bank, you're not paying for that. the bank is paying for it. So they give us what's called, a yield spread premium for placing the loan with them. So those rates are also issued on a wholesale level. They don't pay for any of our marketing. They don't pay for any of our employees. They don't pay for any of our mortgages or rent. So we get everything on a wholesale level. So that's what the mortgage broker's doing for you when they're shopping around with these various lenders trying to find the best rate.
So let's say they locked in the rate already. And now what is the next step? They have the pre-qualification letter. It was a soft pull, didn't hurt their credit score. And 13, 14 days in, we're ready to close. Is there anything in between, since we're explaining the step-by-step process of obtaining a mortgage and seeing it through the closing date? Is there anything that we missed?
Yeah, so that's good as well. So an experienced mortgage broker like myself, what we do is we basically underwrite the client from the very beginning. So when we issue that pre-approval letter, we've collected the pay stubs, the W-2s, the asset statements, and we've run the findings, the automated findings to get that approval. We don't issue pre-approval letters without having the approval from the bank and the automated approval. So an experienced loan officer like myself, we collect that income, we review it, we underwrite it, and then the soft pull allows us to, look at the debts and everything. Eventually, we have to convert over to the hard pull because we can't run findings with the soft pull. But, we're basically have your file completely underwritten by the time we issue that pre-approval there. That's the difference between my company and other companies. There's other loan officers. They'll send pre-approvals out there and not know if you're approved yet or not. We don't do that. And that's why we have such a high pull-through ratio when we do issue your pre-approval letter. So I would watch that when you get the pre-approval letter. Has the loan officer reviewed your income documentation, and have they gotten an automated approval for you, which means you've gotten some type of electronic approval. Loan officers are not underwriters. Loan officers are not in the backside of things approving your loan. They're the retail person. They're more of the salesperson. They're just placing it. And by law, the underwriters have to sign off on it. But that does not mean the loan officer cannot play a role in being experienced and following the underwriting guidelines to see if you qualify for that loan. So for example, if you run the approval and it says that the income is, $5,200 a month, well, if you run the numbers on the W-2 and the current pay stub, is the borrower making the $5,200 a month? Do you have all of the liabilities in there correctly? Do you have the flood insurance in there? Do you have the homeowner's insurance accurate for the area that they're looking into? So we try to make those a little higher to give the customer a little bit of room in case they had a community like you were down here at Beaufort showing some of those beautiful neighborhoods. Some of those HOAs are higher in one area than the other. So, we try to get an idea where the buyer's looking, and, especially if we're close on the debt ratios and the approvals, to make sure that they know that if that HOA is 1,000 instead of 500, do they have a little bit of room to move in there? That's what the experienced loan officer does for the consumers, especially in the elevated real estate and interest rate markets that we're in right now.
So as we come to a conclusion, and don't worry, we will have more conversations about financing your dream home in South Carolina in the future. But the last question is, what kind of advice can we give our buyers right before or during this process? I know when I work with clients and they're like, oh yeah, I was thinking about buying this timeshare. Like, no, please wait until any major purchases until this closing happens, because that could really hurt your score or your financial capability to even follow through and close on this house. So any advice that you could provide?
Yeah, I've got 3 good tips here. Number one, you want to know what your credit score is. That's why that soft pull is so important. Identify a couple of mortgage brokers that you want to work with, mortgage officer, what do you want to do? Get that soft pull. The soft pull is going to tell you where your scores are. So if you need a little bit of, increase to the credit score, the mortgage broker has the ability to rescore your credit. So, but you don't want to wait until you get under contract to pull your credit and then think that you have to increase your scores. Do that early on. Let the mortgage broker work some of their magic, get your scores up, because higher scores yield lower rates. So you want to have the highest credit score possible. But tip number 2, get an experienced realtor. I've seen in this market right here, buyers with realtors who have experience, realtors who are knowledgeable with areas, you want to go with them. Diana, you're doing a great job, going and finding the communities that are popular communities and where some of the, more popular areas are. You're very knowledgeable with the markets. You've got buyers guides and relocation guides. That's the difference for the buyer right now. And I would encourage all the buyers to land with, a realtor who is giving you great value. And I think you do that better than, a lot of the realtors that I see on the market right now. So congratulations to you. But tip
Thank
number
you.
3 is just work with that experienced loan officer. I mean, experience does matter. I know that's a Morgan and Morgan attorney. They kind of coined that phrase, but the experience does matter. Insurance, realtor, mortgage broker, attorneys, it all does matter. And your transaction is more important than ever right now.
So there you have it. Thank you so much for watching until the end. And if you have any further questions and would like to reach out to me or Benji, all of our links will be provided in the show notes below. And we'll see you next time. Bye for now.
Cheers, everybody.